Hi, afternoon, morning, everybody. Hello, welcome back to the Commercial Credit and Collections Conference. I do know where I am. Apologies for that. For those of you who've just joined us, we just had a session this morning on trade credit and credit management and the future of that and the optimism, pessimism around that. That's been recorded and that'll be shared tomorrow, hopefully from tomorrow. So you'll be able to view that, log back in and register, and you'll be able to see that. Those of you who've joined us as well, you will know or won't know that we've got interactive elements to this event as well today. So you can obviously see us and the screen in front of you. But we've got some various options on the left-hand side, which gives you information about today's event. So there's a little eye icon on that. Have a click on that. That gives you information on the agenda in this session. It's really brief. But it also gives you a link at the bottom of the page to click here to log into our session, which is going to follow this, which will cover insolvency and zombie companies. So it'd be great if you can join us on that. That begins at 11:55, that one. And then the second icon we've got, importantly, is we want you to interact today and ask questions. So there's a speech bubble there, so please get involved with that. We've also got an icon which gives you, it's like a picture of a person outline, and that gives you information on all our speakers, little profiles on them. So definitely have a look at that as well. And then we've got our supporter profiles, which in this particular session, we're kindly supported by Intrum, who are sponsoring this session. So have a look on that. We've also got information on other sponsors across the day. And then thirdly, we've got a folder icon. And on that outlines, it's got links to PDFs and web links, so you can look at more information. So for example, Intrum have launched a new payments barometer report. So have a look at that as well. That's quite interesting, some findings in there. So that'd be great. As I mentioned, this session, we're going to discuss business change and credit management, sponsored by Intrum. This session will be chaired by Brendan Clarkson, Director of National Credit Service at Begbies Traynor. And Brendan is going to introduce himself in a second, and also our panelists, and then we'll get into nitty-gritty and discuss some of the subjects that we're going to cover off today. So, Brendan, I'm going to hand over to you, and if you could give us a brief introduction about yourself, that'd be fantastic.
Thanks, Colin. So, hello, everyone. As Colin said, my name's Brendan Clarkson. I'm a director within the Begbies Traynor insolvency practitioners. I lead our National Credit Services team, which is basically supporting creditors in anything pre-appointment insolvency. We do post-appointment work and have done so for about 20 years now. I'm going to head over now to our panelists. So we've got 4 panelists today. I'll give you their names and what they do, and I think I'll pass it over to them for a quick introduction. So first of all, we've got Martin Kirby, who's Head of Credit Risk and Collections at Business Stream. So, Martin, do you want to give us a quick whiz?
Thanks, Brendan. Yeah, Martin Kirby, Head of Credit Risk and Collections at Business Stream, wholly owned part of Scottish Water, working in the B2B only space of the water industry in both markets, which is Scotland and England, working out of Edinburgh on the Gyle next to the airport. So we have a fairly strong team there. So yeah, that's us.
Thanks, Martin. Next, we've got Craig Farmer, who's the CRO at Fleximize. Craig?
Yeah, good morning. Thank you. Craig Farmer, Chief Risk Officer at Fleximize. We are a fintech company that lends to SMEs up to $500,000 secured and 250 unsecured.
Thanks, Craig. Next, Brad Morris, who's Head of Credit at Dell.
Yes, good morning. Brad Morris, Head of Credit for Dell Financial Services in the UK and Ireland. We're actually a captive financier within the Dell Technologies Group, and we're regulated under the Central Bank of Ireland and looking after customers, anything from small ticket credit scoring right up to through the mid-market and the enterprise space, also the large corporate multinationals and government risk, and have something like over $500 million of assets under management on our book right now, and we're the largest space within the European portfolio.
Thanks, Brad. And finally, Ian Davies from Intrum, who's today's sponsor. Ian?
Hi, good morning. So Ian Davies, Client and Sales Director for Intrum in the UK and Ireland. Just by way of introduction to Intrum, we are Europe's largest credit management company. We operate in 24 European countries. We service about 80,000 clients, resulting in about 250,000 customer interactions daily. We offer a range of services across the credit lifecycle. So that includes ledger management, white label collections, debt recovery, and debt sale.
Thanks, Ian. So, Colin, are we going to head straight into the session this morning?
Yeah, you go. You start asking the questions, Brendan. That'd be great.
Brilliant. So how we're going to try to format the morning is I've got 6 or 7 questions. Please feel free to send questions in, and Colin will be putting those forward to myself, and I'll put those forward to the panel. So the first question for today is, please can you give us your business views on the impact of COVID-19? Also, what will a return to normal be? What are our expectations for the future, our outlook? When will return to normal be normal? Will the vaccine make a positive difference? Okay, so quite a lot there. Would anyone like to start on that?
I can start. The impact has been phenomenal, as I think we're all aware and we'll all agree, especially in the sectors that are still actually furloughed or not allowed to open. I think part of the question was, when will we get back to normal? I personally don't know. If you read all the stats that are coming out and you take on the ONS, probably by the end of next year. But that obviously ensures that we are now actually going to go back to full openness at the end of July. Whether that will be the case again, I don't know. But then for me, we have to factor in Brexit as well. I think that's a big piece that unfortunately we haven't seen the impact of yet. So I have reservations of how much that will impact us as well. With the vaccine, I've literally just had my second vaccine, so I do hope the vaccines work, and I'm sure they will do, but who knows with the different variants that are coming through. But I don't know if we've seen the peak yet for businesses. I think that we'll find that out once furlough stops and everybody goes back to whatever is the new norm.
Martin, any comment?
Yeah, I think I'm with Brad. What a phenomenal change this has made to life, really, and business life especially. And obviously, working in utilities, we're very close to the customer. We need to work closely to the customer. The impact on organisations in their P&L and then on their provisioning is huge. I think the vaccine, my opinion on the vaccine, I think the vaccine is working. You can see that in the statistics. The cases are still growing, nowhere near where we are, but are still growing, and there are various variants. So, the delay again in England to go back was inevitable, I suspect. But I, honestly believe that, we have we have to attempt to bring this thing back together and to stick on plan and bring teams back together when it's safe and possible to do so. I know in my organisation we will do a phased return of that. Obviously we're based in Scotland, so we'll be listening closely to Nicola and the government there to see when that is safe to do that. But whilst we've experienced some loss of production working from home, I think generally many organisations, and I've been on a few of the webinars here, have experienced quite a good efficiency working from home. So I think working from home will be here to stay in some part. I know in my organisation we will certainly offer that to certain teams. But I do still struggle with the fact that customer services can work in that way efficiently, or we can get the best output for customers in that. Some organisations which have been typically profit making over the last few years, you will see post losses no doubt in the next 12 months or so as their provisions start to take hold on their balance sheet. So I think it's seismic. I think I saw a poll on one of the earlier events. When will we get out of this? Is it the end of next year or 5 years? And I just wonder whether or not it will take more than 1 year. It'll be 2 to 3 or 4 years. So yeah, that's where we are.
I guess,
Yeah.
the next question that, I've got down is, how concerned are we about late payment? So, I mean, Ian, your business, I guess, is a lot about repayment in what you guys do. How, what have you put in place? Has it been an issue in the last 15, 16 months?
There's probably two answers to that question. I think as we are today, and speaking from the base of clients that we operate within, we've certainly seen an uptick in arrears, probably not at the level that some entities were forecasting. And I think that's because the overall impact is slightly masked at the moment by the government schemes. So furlough, bounce back loans. Obviously, you've got a range of companies that have taken out bounce back loans and are now starting to become due for repayments. That's clearly going to impact their overall ability to service other creditors. So that's certainly a concern. So if you look at the flow forecast we're seeing from our client base generally, it is forecast to tick up relatively drastically by year end. There are certainly some specifics for certain sectors that have been impacted potentially more than others. So I think that's certainly a concern, and we generally see a theme that by year end arrears flows will be higher than they are today. And then Colin alluded to the fact that as a group we've launched our European payment report yesterday. That essentially is a survey of 10,000 companies across Europe and really gathering their views on late payments and the impact of business. And I think the key findings there are really that over 60% of respondents said they're more concerned than ever about late payments and their ability to recoup outstanding amounts. That's up from about 40% last year. So there's definitely a general nervousness in the markets. And interestingly, the impact in the UK was perceived to be greater than Europe generally, which is an interesting statistic. So I think, we're thinking that as time goes by this year, the new to arrears flow is certainly on an upward trend.
Thanks, Ian. Ian, the report you just mentioned, where is that available?
Yeah, it should be available as a download. I'm sure Colin will let people know how to find that. But yes, it's free to download. Should be available for anyone in the session today or on our website.
Thanks, Ian. Brad, I know that was quite a comprehensive answer, but any thoughts on the same question?
In regards to late payment, because predominantly we're a leasing company where there are fixed payments over terms between 2 and 5 years, we're pretty much a known entity in terms of what has to be paid. So we haven't seen a huge downturn in that, but where we have seen it on our live customer book, it's been a matter of simply working with the customers and asking them, well, what sort of scheme do you have in place? Do you have credit lines available from your bank to maintain regular cash flows? And asking them what sort of get well plan do they have in place? And we have found that customers have been very open with the sort of responses they're getting because they have to have the same conversations with their customers. So there has been there's been a lot more openness in exchange of information. And if a customer does say, I need an extension on a payment, we've got moratoriums in place, or we have other payment plans in range for our customers who may be midway through a fixed term, then as long as we can see that there is a viable get well plan, then we'll certainly entertain it. But there has been some upticks, but because it's a fairly known entity, our repayments are fairly well known. Then we haven't seen as much as it could have been. The other thing, of course, is that because we're leasing technology equipment, that is crucial to the operations of the business. And the last thing they want to see is for us to be knocking on the door, taking away laptops and servers and exercising rights of reclaim and rights of default in insolvency events. So providing you're working with them and providing you have adequate security, it does actually help you maintain some cleanliness in your collections of your book.
Thanks, Brad. Craig, I'll come to you on the next question. As being a lender, so I mean, one of the things that I think lots of businesses are finding, they're seeing different trends and how people are paying. have you seen any new trends in payment terms, or are you having customers come to you with the alternative payment terms that you've already initially set out?
Yeah, we did it, especially at the start of the pandemic. Obviously, you need to ensure that you comply with your lending policy, and Fleximize, as part of the name is we're flexible with that. We do have moratoriums where also we can enter into payment plans, etc. But we have seen that. But just to go back and circle back, our loan impairment charges and arrears is very good at the moment. It's very stable. And I think it's part of what Brad said. It's actually talking to the clients and making sure you're happy with them. And what we actually did was actually go out at the outset, so 12 months ago, 14 months ago, and actually ask our clients what they were doing with the potential COVID. Are they taking more bounce back loans? Are they deferring using the furlough? Are they reducing their costs? So we were actually quite proactive at that point when March, April of last year. And what we're seeing that has given us a lot of benefits in where we are with that. But yeah, we do see certain clients, as I said to you in the introduction, in the first question, it's mainly in the sectors whereby they haven't been able to fully open yet. So in the hospitality service sectors.
Thanks, Craig. So, Martin, I'll come to you. As a utility provider, it must be a difficult one. I mean, you guys are supplying, all right up to insolvency, I suspect. So, I mean, how have you found payment terms? I'm presuming you're getting constantly approached regarding payment terms.
Yeah, I mean, the answer to that question is yes, we have, but mainly driven around regulation. So working really closely with regulators. And look, the view from a utility company, water utility company in this pandemic is that, we need to reach out to the customer and work with the customer. Predominantly, our product is in the B2B market. So we've had to reach out to those customers and offer them payment terms beyond, what you would normally do. I know some of our Scottish customers may take 1 year or 2 years to pay. So, it's trying to work with the organisations through this. We had a number of deferral schemes, payment holidays, and we went straight out with COVID from the outset, from the get-go, and offered this to our customers to try and assist them through the period. And we're still working through that. And then even in this last phase, we have asked customers whether or not their new bills need to go on deferral as well. So I think it really is about working with a customer and really making sure that we engage with them and then really understand, just like we mentioned, and I really like the Get Well plan, just really understand their Get Well plans and making sure that we can assist them through this. Not like technology, we stopped disconnection generally across the piece, so we didn't pull them out or pull the plug. We tried to work with them and make sure that happens. There is obviously some parts of that SME B2B market which is more difficult to reach. Our concentration at the moment is trying to get that done. So work with the customer. Payment terms have changed. We have to work with that and work through it this year and next year. And at the end of this, we hope those customers will recognise that fact and bring that brand loyalty back to the organisation, which is where we want to be, really, to be honest.
I think the next question, I was reading through it, and it's a difficult one because we're all big, all the businesses around this table are fairly big businesses. But what is the impact of late payment to your business? We've always, we've discussed this for 10, 15, 20 years. But what is it now after COVID with the restrictions, with the empathy, with the reputational piece? How are you finding the late payment affecting your business?
I mean, Brent, I can add to that. I mean, it has to provide an impact on that working capital drawdown. There's no shadow of a doubt about that. And I think as an organisation, we then now need to look at the risk sectors that we're working in, and make sure that we're correct in those sectors. So, for me, it's going to add pricing pressure on organisations. We're regulated by cost and price, obviously, but we've still got a business to run, and we've still got to work with that working capital. So it has to have a huge working capital impact and really start and really mean for us that we have to really now be careful of the sectors that we are working in.
Thanks, Mike. Presenters, when you're not speaking, can you put your go on mute, please? Basically, thank you. Okay, Craig, any follow up for Martin's comments?
To echo everything Martin's just said there. For me, it's, as a chief risk officer, you'd probably hope I'd say this, but it's actually identifying the risk as soon as you possibly can, and when working with that risk, as a business owner, as a risk man, or as a finance man, that's key to me. When can you actually spot that risk? What can you do to do it? I'd said, we did exactly the same as Brad did. We called it something slightly different to the wellness, but understand that, and then you can plan it into your P&L, and also you can understand and empathise with the clients and where they're actually coming from. And again, it's just key, really. Is speaking to your clients and helping them through.
Thanks, Craig. So on that, I mean, I guess there's always still going to be that gap between what your payment terms are and when you're getting paid. Are we seeing that in everyday life?
Thankfully, not as much as we were expecting the world to explode when lockdowns were announced at the top part of last year. We didn't get the race that we were expecting. However, what we did do, and this was to keep the banking regulators. The banking regulators wanted to see, what are you guys doing to address what could potentially be an explosion? So the sort of things we did was lower credit authorities across our underwriting teams, so that where something maybe that used to go into a senior underwriter had to be now escalated to your chief of credit. There were also, we had to identify what we considered the high risk sectors, such as non-essential retail, travel, and not so much on, let's say, what would be considered essential services, such as pharmaceutical, telecoms, and transportation. So it was delineating that, so try to get ahead of them, and also saying, instead of, let's say, looking at your top 5 exposures within that group, you might have to start looking at your top 15 or 20. So for us, it had our reporting burden escalated significantly. But what it did allow us to do was to say, should we be concerned with these customers? Do we need to talk about them? Should we put them on a scrutiny or a watch list and speak to them and just say, how's everything going? So we've found getting ahead of the disaster, sort of hoping for the best, but expecting the worst, and doing that on a sort of tactical level, by sector, by customer type, by exposure type, and identifying where your risks are, and saying these are the guys we should be spending time at, and then putting in a regular regime of reporting, even if it's just looking at credit agency reports or checking news feeds to make sure there's no big blips. And if there is, then you've got to call them and say, guys, is everything okay?
Thank you, Brad. Guys, I've got I'll read the question exactly how it's come through to me. So the question is, do you think there is a need for further regulation in the industry for firms to look within and be honest about how they treat their suppliers? So I guess this means payment terms, paying on time, etc. I mean, we already know that we've got the prompt payment code. It depends how you deem that, if that's a success or not, going a long time now. I think last time I looked, about 2,200 signatories on there. What more can be done? Is there something more we can, the government or some sort of regulatory do in our industry? Ian?
I think from our side, we'd say yes, there is more to do. I think if you look at the consumer versus commercial splits, so FCA regulation for the consumer, they're very robust. Both entities kind of have clear remits, probably less so in the consumer space, both in terms of payment terms, but equally treatment of the end customer as well. I think there's regulation there that can be tightened. In terms of the treatment of customers or creditors and the ability to pay on time, again, going back to the survey, very interestingly, that nearly 70% of larger businesses said they have a kind of an obligation to pay smaller businesses on time. However, only 17% are currently members of the Prompt Payments Initiative. So those two sort of points are slightly in conflict as well. So I think, yeah, there is a general need for regulation to help drive that behaviour. So rather than being an ambition, it becomes a requirement.
Craig, any thoughts?
I suppose it depends upon what mindset you are and the conflict of regulation or less regulation, if you wish. Fleximize is unregulated. We're in that sector. I've worked in highly regulated banking before. Personally, do we need to see more regulation? I don't think so. I think you can be too over-regulated. We've got to remember where we are as a company, but also as an economic power. If you've got clearance, if you've got choice, if you've got transparency, I think that probably works better. Again, I agree with what Ian said. If you look at some of the figures that are coming out, there's an awful lot of conflict of what we want to be and where we are, especially with the late payments. But I think transparency is where you get your confidence. I went to the Lending Standards Board meeting. I thought that was excellent. I can see where they're coming, and I think personally that's the way to go, rather than just having some form of regulation that then will impact smaller businesses and potentially hurt them more than anybody else.
Thanks, Craig. Martin, I presume for you, I mean, I think you've already touched on it, being a utility business, I'm presuming you've got quite a lot of regulation, you know, outside of anything that, you know, credit just tells you.
Yes, Brendan. I mean, obviously, so we have technically three regulators. So obviously we have Wix in Scotland, which we work really closely with in our Scottish market, Ofwat in England, and then Water UK as well. So yeah, we have three potential regulations. We sit on all the regulation boards as well and work really closely with them to make sure that what they want us to do, we can actually interpret and makes financial sense when we try and apply that to the customer base. So, you know, regulation is really, really strong. The interesting thing about the regulation and is that it takes a considerable amount of time to wind out as well. So, you know, where you can make reasonably fast decisions in your organizations and be quite agile in things, the regulation just takes a lot longer, and, you know, don't expect it to happen immediately. It will happen at given times throughout the year. So that's the only thing I would say.
Brad?
Yeah, I was going to say that ironically, even though we all see regulation as being sort of an administrative burden, yeah,
You got some really bad interference behind you.
Have I?
Yeah, is everyone else picking that up?
Yeah.
Try again.
Sorry, is that any better?
No, it's
Okay. It's okay.
Sorry, Brad. Okay, I've got another question just come through. So this one is, what are your thoughts on your business outsourcing elements of credit management for existing customers? Are you currently outsourcing any credit management functions? So I guess for this, because I'll start with you, Craig. You're a lender. You must outsource some parts of your credit function.
We do, and we try not to do. As I've hopefully tried to say throughout the call here, we try and work with the client as much as we possibly can. But we're based in Ipswich and we lend throughout the UK. So in certain circumstances, yeah, we do. If it's more advisable for us to do so, then we will look to do that. But it is, for us, the last resort to do so.
Thanks, Craig. I'll come to you, Martin, before I go to Ian. Martin, you know, I'm presuming you guys, you know, a huge business. I mean, you cover your Scottish Water and Southern Waters. That's correct, isn't it?
Well, they've merged into us, the B2B side, certainly last year, the year before actually on the acquisition. So we do Southern Water. We also do the B2B side of Yorkshire Water. That's not with us quite yet, but that will be with us sort of from November onwards generally. So yeah, we have a reasonable customer base to cover. I think the answer to that question is we technically insource as opposed to outsource, because outsourcing in the pandemic was pretty tricky. So we do insource seats to our inbound team, certainly in the collection space, and it gives us a reasonable amount of agility and flexibility. You know, we need to try and maintain our 1,000 calls to customers a day, and with that, you know, you need some outbound power. So we do that digitally, of course. With our digital treble touch technology, so where we're pushing to customers and asking them to click to call us back and all that sort of stuff. So that all works really well. But yeah, we insource technically. Our insourcing arrangement is really a bit unique. The guys, whilst they're not paid by me, work for us as part of our team. They join our sessions. They're on our dialer. They're on our inbound and outbound. And they work all our systems the same as my own team. So it works really, really well for us. So yes, we do.
Thanks, Mark. I mean, Ian, I'm presuming you are the outsourcer for many, many businesses.
Yeah, I think what we've seen, especially over the last year, is an increase in demand for lots of reasons. I think the rationale for outsource is clearly critical to that decision-making process. And I think over the last year, we've seen it be a need for additional capacity. So where, for example, companies have been swamped by inbound, we've been offering outbound services. The need for greater technology sometimes. So clearly, this is all we do. So all of our investment in tools and technologies are, you know, fundamentally for arrears or collection services. And it's sometimes quicker to outsource to gain those technologies rather than to develop or build internally. And especially during the pandemic, people needed to react quickly. So we've seen certainly a shift in demand. However, our view is very much that when you're talking about outsourcing, it's not necessarily an insource or outsource discussion. It's at what point does it make sense to outsource? Where are our services additive? You know, where are we offering something different to what could be developed internally? So I think, you know, those lines are now slightly blurred between you know, whether you're internal or external. I think it's the two combined is probably the way forward. You know, we see ourselves as an extension of internal operations. I think our partners now are saying actually that kind of blend or hybrid, it makes sense now.
Yeah, I think that word outsourcing probably is a little bit outdated now, but you know, I do, yeah, completely agree. Ian. Brad, should we try again? Are you there?
It says green on my thing. Are you there?
Yeah, no, we've not got you. Sorry, Brad.
Okay, sorry, I'll reset.
Okay, I'm going to go to the attendees' questions now. Let's see what we've got. So we've got a couple here. Bear with me. But we've got one from Aaron Lane, who works at LB Insolvency. So Aaron's question is actually quite insolvency-led. What issues do you think the courts and insolvency service will have with what will likely be a rapid influx of CCJs, creditor bankruptcy orders, and winding up petitions? So anyone want to answer that question? Do you need me to read it out again, or did you pick that up?
Could you read it again for me, please?
Yeah, of course I will. Okay, so the question is, so what issues do you think the courts and the insolvency service will have with what was likely to be a rapid influx of bankruptcy petitions, winding up orders, and CCJs? So basically, creditor-led action. Obviously, we see yesterday that the winding up petitions have been extended again until the end of September. CCJs, so we expect the court to be very busy. We know that. So how are you guys finding it now? What do you think? I mean, do any of you guys use a winding up petition or a I won't ask about the bankruptcy, but winding up petition or CCJ? Do you guys use those tools?
It's not
as
particularly
a
one
lender,
view. I think we're settling more upstream, so yeah, not one for me to answer, I don't think.
I was going to say, as a lender, we obviously have to use every means that we possibly can to recover our debt. Always the last case. Personally feel that in the wider spectrum, rather than just Fleximize, is going to be a very busy time. I think the first major lender, if I can say that, will have an awful lot of bad press when they start claiming. It was out in today that the eviction notices have now been suspended until March of 2022. So for me, I think the ball keeps rolling, and it will be an interesting sight come 2022 when I think everything will unfurl. It's going to be a major issue, but will the government allow it? Will that impact on the growth going forward? Yes, it will. Can they allow that to happen? Probably not. I'm much as in the dark as anybody else, but I do think it will come to a point where the can's been kicked down the road as far as it can do. And I think that's the point where we all need, as professionals, to try and make a decision of where we are at that point and what we can do before that.
Do you know what, Craig? I did a session last week with about 90 credit managers, and we did an online poll, and we asked the 90 credit managers who would use a winding up petition as soon as they could use it. So, straight after June the 30th, and 39% of people said that they would use it with immediate effect. 31 said no, and the other bad maths here, 30% said, that they're just unsure. But 39, so basically one third would use it. And I still think, I work with credit teams every day for particularly bankruptcy and winding up petitions, and there is that kind of pent up. I think someone said last week, a credit manager said, whoever shouts loudest. I'm not sure it's going to be quite as bad as that, but I do think we're getting to a stage now. 15 months ago, this all started, 14, 15 months ago, this all started where you can't use a winding up petition. You've now got to do the COVID test. I can't see how a credit team can go to a lawyer and sit in front of a district judge and say, look, you're going to pass the COVID test. I just don't see how you're going to get anything through in the next 6 months, even once September comes and goes. Martin, do you guys use anything like that? Oh, okay, I've just lost Martin. Brad, should we try again?
Sorry, Brent, 1 second.
Oh.
Sorry, Brent, hit the wrong button there. I do apologise.
That's okay. Do you use any of those kind of collection? I'm not going to say collection tools, but insolvency and to push. Yeah,
we have done, Brent, and one of the things that we noted at the start of the COVID, was sort of March, April last year, is that we were well behind. So we utilised a third party to manage the actual claim process as well, and then internally we've been driving some sessions with our credit providers and more looking at the typical out of business indicators as well. So literally driving those out of business indicators from our data sets and then actually investigating that as well. Of late, what we've done is gone more out to the customer. So we've been working on and are still working on a process which we call re-engagement, which is actually visiting the customer premises, which basically tries to invite us in to try and have a discussion with the customer about how they're doing, like that get well plan idea, and take some information from the customer, which will then allow us to establish which is the correct workflow or which is the correct interaction for them. So yeah, definitely have, and certainly all our out of business ones we are visiting for sure, because obviously there's a key part of what we do is market data. So we have a duty of care to make sure that we update the market data with the correct information as well. So I spent a lot of cost in that arena, Brad.
Thanks, Martin. Brad, have we got you back?
I hope so.
Okay, brilliant. Brad, any thoughts on how the court will deal. Well, can the court deal with it? Number one, is it something that you guys consider? Is it a tool that you guys ever use in a kind of process?
We wouldn't use it in the process, but we would be an observer in the sense that we're not the only creditor. So it's not just our action, but it's monitoring other actions. So we're thinking that there will be a surge, certainly as the so-said zombie companies start losing their support, and they run out of can and they run out of road. So there will be a backlog. It'll probably be a problem in the sense that our claim will be held up amongst the many others in court, that it will cause delays, and at some point we're just going to have to bear it on the book. When they eventually come to see our claim, what we're going to have to do is to show that in all places we've acted reasonably, we have tried to work with the customer in every place, and that we have done what we can to support them, and that we too ran out of road. So that's real. I think it won't just be us in the lineup if there are any claims. So that's really the attitude that we've got to take.
Thanks, Brad. Okay, we've got another question from Andrew Hignett from Johnson Tiles. Okay, working with customers through these unprecedented times have proved beneficial in a number of ways, but how far do you continue with such forbearance before the momentum of other factors start to work against the customer and you have to revert back to a more formal recovery enforcement? Could this set off a chain of events that could have widespread impact, like a collapsing house of cards? So a little bit like, I guess, what we just mentioned there, taking this, you're trying to work with creditors, etc. I mean, how far do you go before you think we're not going to get paid, we need to take action? Where do you draw that line?
For a lender, obviously you've got your lending policy, and you have to work to that. That's sacrosanct. So whilst you can talk to the clients, work with the clients, there is a certain point in the process where you have to unfortunately then take the next action, and that's going to be up to everybody's individual lending policies or risk appetite, whichever way that they look at it. So for a lender, that would be my answer to that.
Brad, maybe one for you again.
Yeah, with even though a lot of people see regulatory oversight as a bit of an admin burden, what it does do is force your hand to ensure that you've worked reasonably. So if you do have to put a claim in, or let's say put a termination notice in and then go after the equipment, it becomes really hard for the customer to say that we are using heavy-handed techniques. And especially in the COVID environment where the customers have been stretched, we're very open. Again, the regulator is forcing us to say, you have to work with your customers in this environment. You have to be reasonable. You have to be open. You might have to take a bit of a hit in your cash flow for some time. Where you would normally call in the account at 90 days, you might have to wait till 180. The irony of all of this is that most of our arrears that we're seeing are usually for the larger companies, the blue chip companies, where your invoice or your purchase order gets lost in the administration jungle over in their processing center. The smaller companies, usually you've got line of sight straight into somebody who can write a check.
Thanks, Brad. I mean, I completely agree with you there, Brad, but I think one worry there, you're saying about 90 days, 180 days. Some businesses just can't afford that extra 90 days. And I think, one thing that I'm seeing on the insolvency side, and I have seen for, since the first lot of zombie businesses and when it just insolvency full stop, it's always the smaller firms, these breakdown of payment terms are made up. Make up the failures of the SME market, unfortunately, and I can't see a way forward from that. It's a difficult one. Ian, have you got any thoughts on the matter?
I think discussions with our client base are twofold, really. So I think that given the current environment, it's certainly a balancing act for them. So clearly, customer retention, brand loyalty, as the economy improves, is clearly critical for them. Obviously, that cost of acquisition for a customer is a significant cost to the business. So losing market share in the short term is a risk for them. So we're seeing them manage their kind of exposure and risk probably more proactively than they have in the past. So monitoring credit lines potentially more closely. We've been doing some work with some behavioural scorecard development, so they can start to see who is at risk, focus their time and efforts on the right customers in the right way. And we've certainly seen that. And I guess the knock-on effect to that has been that we've been engaged or asked to engage with customers probably earlier in the cycle than we ever have been before. And we're talking, pre-arrears, reminder services, just really making sure that people aren't getting to that sort of distressed state unless there's good reason for it. So we're less kind of active in that sort of back end process, but I think there's lots of work and focus on the earlier interventions to stop that occurring, with a view in the longer term. Many of these entities will still be customers.
Thanks, Ian. Guys, I've finished with all the attendee questions. I guess I'll finish with a question of my own to each one of you, the same one, which is, we're looking forward. It's very uncertain. How you guys, what's your mindset on how you guys, your stakeholders, your share, what is the mindset of the business now? Are we having a good 2022 or 2021, 22? Is there something to look forward to?
I think that has to be the case, Glenn. Certainly for our business, we've had a strict plan more or less from day one invoked, working with the board on that. We carried on with transformation. So we've spent X million on transforming our billing program through that period of time, which is, I've obviously meant a take up of more staff. So I think, we are building our business for the future, making sure that we have that plan, and we work closely with the board on that. So I think it's personally, I think it's been great to see the energy, the teams and the camaraderie and the resilience in all those three things the teams have shown through this period. And so many organisations are so thankful for people, working from home, unsolicited, getting equipment, making sure they're all connected. And I think that's been really good. And I think that will just drive us further forward. I do see some blocks, I guess, with recruitment, as this starts to roll out, the flexibility of working will become a really key driver on people's agenda. So, I think that will sort of cause us some issues on recruitment, but I think it's a really strong opportunity for us in the next couple of financial years.
Thanks, Mike. Craig, can I ask? I've seen some bolshy numbers about bounce back, what's going to happen in this country. Have you got any personal opinion, business opinions?
Well, we had the best quarter ever in Q1 this year. So we are recruiting. I think we've just taken on another 4 or 5 individuals. So we're seeing that it's going very well at the moment. And with the flexibility that we have, we've also adapted or about to adapt some of our products as well. So we see a very, very rosy future in 21, 22.
Thanks, Craig. Brad?
Yes, I was going to say and I know it's been upbeat. We're starting to see lockdowns easing. We're starting to see a return to normal, and that does give a sense of optimism. What I'm more worried about is the surprises, because we can get carried away and think everything's getting back to normal, and there will be customers who look as though they are normal but are in fact ready to fall over, and you will be scratching your head to say that customer, and you're looking at the administration order from their accountant to say that they've had to close shop. I think we have to remain diligent. Don't just think because there is a spirit of optimism that carries across every one of your customers, and just because they seem to be going okay, right now. Continue to monitor those which you think are going to be in the higher risk segments of your portfolio, because you will get caught out. You will get blindsided by that email on a lazy Tuesday that will cause a lot of trouble. So we have to remain diligent. We have to remain engaged with our customers and our partners and our stakeholders to ensure that we still have those channels of communication open. I think what's happened is that the credits really enjoyed working close with customers, and we don't want to lose that momentum. We have to keep our up front of the customer's consciousness. This has been a good place for us. Let's keep that going.
Thank you, Brad. I guess, Ian, I'll let you have the final comment then.
Right. In terms of the outlook, our view is it is very sector specific over the next 12 months. I think there's certainly opportunity for a number of sectors to bounce back quite strongly. But what we've really seen, and which is quite an interesting dynamic, is until recently, lots of businesses have been in what we call reactive mode. So if you look at the demand for our services, it's been solutions that we can stand up very quickly and meet an immediate need. We're now seeing that people are back into strategic mode. So what does the long-term strategic solution look like? And therefore, I think that brings opportunity for the market, for individuals, and for the end customers as well. So yeah, some tempering by sector, but largely, it's more strategic is kind of better for the market generally, our view is.
Thanks, Ian. Guys, a huge thank you. I'm going to hand back to Colin now for any last comments.
Brilliant. Thanks, Brendan. Thanks, everybody. It's really interesting to hear the opinions there of what's going on, and particularly what's going on with the late payment and the terms, and just generally what's happening out there. And kind of my thoughts are, as a small business out there, it's just really interesting to hear. And address. We had a couple of poll questions come up there about late payments and terms and adjusting terms. I've certainly seen that as a business as we move forward. I don't know even if I think it's always related to the pandemic, but it's interesting to see how that will develop, and interesting with the prompt payment code and what's gone on with that, and to see if that develops teeth over time. That would be an interesting development as we move forward. But I'll round up now. We've got our next session beginning in just under 20 minutes time, 11:55. Brendan and myself will be on that one, and we're talking about insolvency and zombie businesses. So that kind of leads into a little bit to what's just been addressed here. But I'll round up now by thanking Martin, Craig, Brad, and Ian for their insights. Really good, really interesting, and of course Brendan for chairing the session. As I say, if you want to join us on the next session, there's a link in the agenda section there. Have a click on that, and also have a click. This is live. Well, once we do the recording of this, it will still have the live links and related to the late payment report and other things like that related to the event. So I thank our sponsor, Intrum, for running their support on this session, and we'll round up and we'll say goodbye. Thanks, everybody.
Thanks, everyone.